morning, good afternoon, and good evening to all the global listeners. It's an absolute pleasure to have episode 5 of the Founders Ledger. I am Maia Benzimra. I am the host of the Founders Ledger, and I started this to give the voices in my network a platform to share their wildly and profoundly interesting experiences, to provide founders in the on-chain industry stories from the people doing the real groundwork that drives change and professionalism. Today, we have Ralf from Nexus Mutual, whom I'm so excited to have on the Founders Ledger. Ralf has a very impressive career starting in corporate and now deeply in on-chain finance. Ralf, thank you so much for joining us today. Would you like to give a little introduction to who you are?
Good morning, good afternoon, good evening. Maia, thank you so much for having me on. It's a real pleasure to be here. Impressive that you're now up to episode 5. I've been listening from the beginning, or watching, in fact, and I'm a big fan. So it's a real pleasure to be on with you today.
Thank you so much, Ralf. So let's just give the audience a bit of background into your experience, your expertise, your current position, and the work that you're doing at the moment.
Cool. I'll try and keep it relatively brief on my background. As you said, I'm at Nexus Mutual. I'm the head of business development. Coming up to about 2 years now with the team. I've known them for quite a lot longer than that. And there's some interesting background there onto how I got into the team and some old connections, a lot about network and people that I've worked with in the industry, both within digital assets, but also before, I guess, what TradFi, like TradFi corporate life. So yeah, from sort of like the earlier days of my career, I'm a graduate in computer science, so I wasn't really that interested in finance. I was much more of a techie at the time, when tech was kind of just becoming cool, not where we are nowadays, especially not now where we're at with AI. So I was like living in the UK in London, and you've got the city of London there with all the professional services, particularly finance and banking. So those are the sort of the graduate jobs that were available at the time, and I applied and went in as a software engineer. And I guess like interesting point for me was then there was slightly more rigid setup in the corporate hierarchies. So tech was kind of lumped in by the traders as the back office. And that kind of stuck with me a little uncomfortably. We were, from my perspective, we were the innovators. We were building technology, lightning speed. I was on a couple of rotations where I ended up working on products that would give the traders live risk dealing, which is kind of innovation at that point in time. And yeah, I wasn't sure I was necessarily appreciated for it. So anyway, got to know some of the guys on the trade floor, and a position opened up in hedge fund sales. And I didn't think of myself as a sales guy. I think it's kind of complete opposite spectrums at that point. And the sales guys, the big beasts on the trading floor. But with that opening up, I thought, hey, let's take a shot at this. I managed to I didn't even know what a hedge fund was at the time, but somehow, got a spot on the hedge fund sales desk. And kind of, if I look back now, there's sort of 3 distinct periods in my career. There'd be the technology side of things. It was only for a couple of years when it was pure tech. Then I went into traditional finance, banking. I was on the commodities trade floor, moved from Barclays Capital, then on to JP Morgan. Then that was a good chunk of time before I kind of got a little jaded, a little out from corporate life. Great colleagues, great people, really interesting markets at the time. Went through showing my age now, but went through that 2008 financial crisis. That was really seminal to be sat on the trade floor dealing with funds that were calling us up and wanting to check our credit worthiness, where typically it had always been it was an inversion to the relationship of the banks dealing with the funds, and essentially always wanting them to post live margin to deal with any of the trades that they were doing with us. And instead it was whether we were going to be alive, day to day, given what happened with Lehman Brothers and others. So then moving from there, I was looking for other things to do. I actually took a little hiatus, went off to sort of indulge my other passions, which is like adventure sports, adventure travel, metaphorically dug a snow hole, buried myself deep in there doing stuff, and then came out and then was re-engaging with friends and colleagues. And our now chief operating officer, Nexus Mutual, and he's a friend of mine from JP Morgan. And it was about 2017 this took place, my first entry into crypto. And it wasn't quite diving down the rabbit hole. I sort of needed to be dragged a little bit. Even with my techie background, I maybe had drunk a little bit of the corporate Kool-Aid and was thinking like, this stuff's going to get crushed by global regulations and compliance and, that sort of stuff. But just kept on looking at it and being curious about it, never wanting to do an all-in. Some people it works, right? Like you go all in and it pays off. For other people, you can kind of get burnt by that. So it's sort of curiosity the whole time. And I sort of helped my COO. He was building a business called Token Data. And essentially you could think of it as like the very early days, kind of like CoinMarketCap. It makes it sound glamorous. It was basically just let's say, a spreadsheet tracking ICOs, and we're going through the 2017-18 ICO boom. It was just fascinating with everything that was happening, and you're onto something when you've got people reaching out to you because they've been checking your information online. And they're like, "Hey, how do we get a priority listing for our token launch?" But like to this day, all this stuff, it really mattered the way that we operated, say all the tools and the skills that I'd learned at JP. Because a lot of these projects probably, they're not here anymore. And you had to be very, discerning about transparency, like how are we funding this project? Making sure, all the shit coins out there, that we weren't going to be representing stuff that would, just be reputationally very damaging. So that was like a super interesting kind of great, crazy time. And we've had many cycles since then. That kind of got me into the world of crypto digital assets. And then, I did say I'd make this short. I think I've been going on a little bit, but I'll just sort of finish with like, I ended up like finding from that sort of position, we were able to kind of engage with lots of investors, lots of projects. At that point, we were both like interested in finding things we might want to go like from almost like a consultancy perspective and go in-house. So for my co-founder, he got introduced to Hugh, the founder, CEO of Nexus Mutual at around 2020 and came on board with them. I got introduced to a really great team called Stake.us. They got acquired by, just as soon as I joined, it nothing to do with anything that I was doing for them because I'd only just joined, but they got acquired by Kraken. So I joined Kraken and got to join that rocket ship of an exchange. And that was really interesting because for me, it was, again, a great team, great company, great projects in-house. Something of like a business that was really wanting to mature. So that, to this day, they're looking to, it's all about that sort of like strengthening their corporate processes and beefing themselves up to be ready for public markets. A little bit of a mini JP Morgan, sort of, in the crypto world. So I could take a lot of what I'd learned from the corporate world and bring it. But I then went on to, like, from that staking business that had been acquired, I went on to launch another one with some Swiss-based investors. And then kind of it came full circle, talking to our now COO about Nexus Mutual, and we'll come on to this later, just how difficult it's been in on-chain finance to essentially like protect. And for me, whereas I was working on these staking platforms and projects, it's getting very commoditized. I could kind of see it from my days in the traditional finance commodities trading, where it had been like something of a space for the cowboys. Then it sort of professionalized. And again, like in crypto, you'd find these early pioneers, then businesses would kind of get enterprise grade institutional ready and get very heavily competed and margins really thin out. And where we are now with Nexus Mutual, it's been around since the very early days of DeFi, pre-DeFi summer. I think launched in 2019. It's got like a 7-year track record. And I think, yeah, we're in one of the really challenging spaces, given the market, given crypto as a whole, like some unique aspects of the industry. So it's a great challenge to take part in and sort of help grow the business.
Yeah, and we actually met when you were heading up the institutional sales department at Kraken, which is obviously a huge breakthrough role in the Web3 space. So, and this was in the very early days of decentralized finance, really at the inception of it, because we were at, a small dinner, and it was all about how, certain institutions could start onboarding DeFi, and this was like way before you could even consider, let alone insuring DeFi, but actually onboarding it as an institution. And the times have changed so drastically, I think, from the first time we met, which was about 4 years ago. And just generally love to take my hat off and appreciate the individuals that are doing the real professional groundwork. As I mentioned, this is what this space is for. It's for recognizing the individuals that are on the more professional side of the industry. They're actually driving some real innovation and change and bringing all of their experience from, corporate, or maybe it's creative or however, but actually providing value and making the space more robust. And I'm really looking forward to getting into Nexus Mutual, because it's very impressive what they've done. As we mentioned prior, it's always been a bit of a taboo subject, as insuring crypto and insuring DeFi protocols. And lots of people have been speculative of how that's even possible. And it's obviously a high risk asset, and smart contracts are high risk. So I'd love for you to dive a little bit deeper into Nexus Mutual just as a whole, and some of their processes, what they've done to actually do this amazing work. Like, they've got 7 billion covered, right, at the moment. So, that's not a small feat. And like you said, they've been around for 7 years. So let's get into it a little bit of how they're actually able to cover that size of capital.
Yeah, I'd love to. It's a very big topic. So if I start going off topic and like steering into many of the subtopics, let's say, just bring me back where you think the audience will be most interested. The 7 billion number, that's the total notional of coverage that we provided in that time period, rather than the live exposure right now. The kind of like audience that are really into their numbers, go check the website. Want a fact. I think what will be interesting is we recently published a quarterly report where we essentially made it a special edition about the 10-year anniversary of the DAO hack. Most people in crypto have heard of the DAO hack. So it's kind of like a nice anchor point here to before we dive into some other things. And obviously that happened kind of in the early days of Ethereum, on-chain finance, DeFi. And it's super interesting because like it's the 10-year anniversary. It's also like a really important milestone for Nexus. It's pre our launch. But it's essentially like a key moment in time that gave our founder, Hugh, the idea, the genesis around launching Nexus Mutual. He's a traditional insurance guy, has a pedigree, like senior position at Munich Re, along with like our head of R&D, Ray, also traditional insurance guy. And they were very early adopters, like loved the tech. They were like, hey, for people that these sorts of losses can occur, is there anything that we can build people? And so that's where this all started from. And
it's quite a ballsy company to start, right?
Not without a lack of ambition, all right? But the brilliant thing is that they're more than capable of delivering. And I think what's so great about joining them, this was de-risked for me to the extent that these guys have been doing this for years now. I wasn't coming on to like a brand new seed startup. We're kind of like the name in the space these days, because there were several others. It wasn't an entirely original idea that no one else had thought of. several other people did too. Unfortunately, like from the heydays of DeFi summer, and it was super exciting and everything was just like going to the moon. We then obviously all have the battle scars of 2022. And that's when like it's hard to survive in crypto and digital assets generally. I think insurance businesses are, and if there are big losses in the industry that you're covering, that wipes out insurance companies. And so 2022 was like a graveyard for crypto in general, but for any of the other sort of digital insurance businesses out there, it was painful. FTX, Luna. In both instances, Nexus had coverage users. We paid out millions in claims, but we had a very strict risk management process, concentration limits, all the sort of good stuff that you would have in traditional finance, but alongside the transparency and the decentralized nature, all the sort of best things that you can do in decentralized finance, and they managed to come out of that stronger and prove themselves in that extreme sort of tail scenarios, and then grow from there. And then on that basis, from where we're what's known as a discretionary mutual. So our members, you become a member of Nexus Mutual. It's a marketplace. It's pretty useful to explain some of the basic mechanics here for the audience. A marketplace on chain where on the one side, the people buying, they can come and buy coverage to protect themselves from numerous different types of risks, and we can enumerate those in a little bit. And then on the supply side of the marketplace, you've got people that want to earn yield, and they supply capital into the marketplace. And we have various mechanisms that lock that capital to make sure it's there in the event of claims from people buying the coverage. And in turn, like any insurance business, you earn premiums that generate the yield. I'll pause there for a second, make sure we're still on track. Like, what else would you like to know?
Yeah, so it sounds like the way that you can actually participate and leverage Nexus Mutual is in a decentralized environment. Is that correct?
Yeah. So I guess what we've done is we've attempted to take everything that a traditional insurance business or insurance marketplace has and bring that on chain. So the capital is on chain. We think that delivers significant benefits because transparency that it brings versus like a regulated insurance market. It's the regulatory top-down rule requirements and report people using those platforms rely on, where we're sort of bottom up. Everything's built where you can look block by block, things happening on the blockchain live, a Nexus protocol there. So it's decentralized. So essentially, you do have to go through a KYC process to become a member. And there are certain jurisdictions in the world that we offer the coverage to, but we have global scope, and that's just fantastic, right? That's the promise of the DeFi, is to give this like to the global community and allow essentially anyone. So we have like more than 10,000 members, and many of those are individuals. What we've noticed over the past few years, I think broadly in DeFi as a whole, like the institutionalization, and we're still very like we've had to tweak a couple of things, but the protocol as it was even from its initiation is well set up to handle institutional flow as well. So we now like work with a number of well-known, well-rated digital asset funds. Some of the logos I could mention would be like Dick Edge Capital, Fasanara, and then also large platforms, and those guys that are both building from within crypto, and also the institutional players that are coming and that are interested to get into digital assets and offer, say, new ways to provide yield to their customers. We recently had like a headline deal with the EtherFi, to that later. But the sorts of people that are building like the new new banks, the neobanks out there. We're really excited about what partnering with these platforms.
Yeah, and honestly, just looking at how things are going and the nature of where this industry is becoming more institutionalized, the type of work that Nexus Mutual are doing is absolutely paramount to actually ensure that we are able to, function on the level that we want to. So, super impressive. And you're obviously on the sales side. I mean, obviously you're very technical, and that's been clear. You've got a profound education in computer science, so I think that's obviously very helpful overall. And what I love about this dynamic is that there's two sides to the market. So as an individual, you can get in a decentralized manner and explore options of coverage. And then obviously on the partnership and the institutional level as well, there's the other side of the market. So let's dig in a little bit into the partnerships as you are leading in that area. And you guys just landed a huge partner. We just touched on that, EtherFi. Do you want to talk a little bit about the process of onboarding a partner of this scale, the type of work that you're doing with them, and how you guys are collaborating and what benefits Nexus Mutual is bringing to them as a platform?
Yeah, we're very excited. I think we announced the deal just a few weeks ago. I'd actually say it's been years in the making. Be great if we could have got a couple of the EtherFi team on here to share, because maybe I have to hook you up with them next time, one of your future
We can have them on next.
episodes.
Yeah.
But yeah, I think it's really interesting the way you phrased the question on the sales side and the partnership, because obviously this is around capabilities. We've been diligenced by EtherFi and reviewed against other alternatives and our peers before they selected us. But like I said, I think it's a sort of deal that's years in the making, because everything can kind of look like it's on the blockchain and lives online, but it is very much still an industry, as you all know, works on the institutional level on relationships, and business relationships, and made my life easy helping to get this deal over the line, to the extent that we've known the team for years. Like, as I think it says in the press release, I think Hugh has known Mike and Rock, the co-founders of EtherFi, since before they'd even named it EtherFi. So we've just had this like very long-standing relationship of trust. We share lots of info with one another on market developments, and they've always been understanding how Nexus has been providing coverage. I think it's interesting why it happened now. I think they are moving from having been best known as restaking form, which is somewhat niche. Like some people won't even know what the concept of restaking is. Staking, for instance, they're more turning themselves into a fully fledged neobank. The EtherFi card, I have an EtherFi card. I love it. It's really great. It's a company card that we use at Nexus Mutual. But they've got all these additional services, and they've been building everything on top of this kind of core digital asset on chain, primarily Ethereum, restaked ETH. And they want to make sure they have a way to show to their customers that they take security really seriously. They have, undergone audits. They've done all the things that, are in the sort of checkbook, in the checkbox exercises, and much more, and beyond that. And then they're like, okay, what else do we sort of go to have a large treasury, a balance sheet, but how do the users feel confident that in a stress scenario, through perhaps no fault of our own, some market tail event, they're safe with us? And that's when this conversation's been developing over a long period of time, and they're like, okay, we want to do that, and we want to buy like cover that's really meaningful. And so we did some analysis with them where you look back on the historical slashing incidents that have occurred in Ethereum since Ethereum went from proof of work to proof of proof consensus and proof of stake, and any of the sort of like small slashing incidents to larger ones, just make sure we kick the tires that if anything on a comparable scale and worse, that they would have sufficient cover for that. And that's what we've been able to syndicate on the platform. It's I think great for them. They're really happy. They have an effective manner. Obviously, it's great for us because it's an endorsement for such a well-regarded household name in the crypto industry.
Yeah, and we're starting to see more and more of these purely on-chain banking infrastructures pop up, right? Like I worked for 1 year ago, and even since then, I think there's been 1,000 more that have cropped up with AI integrated, and some of them are purely on chain. And I think what you mentioned is fascinating. It's like we do have a certain standard in crypto, in on chain finance, where we expect there to be an audit. We expect there to be certain levels of security that you can feel confident about using the platform. But it seems like if we're looking into the future here, an extra layer that we're going to start expecting, especially from these types of platforms, is the coverage element as well. It's like that's such a nice add-on, and it's maybe going to become a new standard, because obviously if you think about traditional banking, and you even with neobanks that aren't on chain, you do have regulated, there's a certain level of regulation where you can't lose up to, like, the standard in the UK is like 80,000
Yeah.
or so yeah, where does that leave purely on-chain banks that aren't necessarily like completely regulated in certain areas? Maybe that there is this on-chain coverage option that could help some of these firms get from 0 to 1 much quicker in regards to trust and security.
Yeah, I think there's a number of forces at play here. Like two of them to highlight. You've done articulated one well already, which is kind of like these businesses don't want to be known as crypto niche businesses anymore. They want to be operating on, let rid of the word crypto. Let's just talk about finance, but offer our users like UX, AI integrations to provide better UX, better experience, better like cheap, like run everything on much better tech, so it's more efficient. And to that regard, then you compare it to the traditional financial banking system, but there where it is already kind of like from the regulatory, given the various crises we've had over the years, you mentioned the UK, the protection you get from banks. Probably like for a global audience here, people might be more familiar with the US, where you have the FDIC insurance, where all the banks are essentially paying into one big industry pot. Not because they want to per se, but because the industry regulation mandates it, and then that provides, for depositors. You don't obviously have that yet. Digital asset. So some of the the leading, I think the names that are kind of going to already do stand out and they're going to strengthen their position. You've had Aave last year announce the Aave app, being really bold, and they're announcing anyone that the Aave app is going to FDIC equivalent, not from that regulatory approach, like $1 million of cover. I mean, big number. I think in the FDIC is like 250K. So really interesting. Like they put down a marker at DevConnect last year in kind of the headlines. You've had Robinhood, obviously, is now like one of the things that's been most in the headlines recently. Has been Robinhood and Robinhood Earn on Robinhood Chain. They have sourced some regulatory insurance. So again, like whilst that isn't directly with Nexus Mutual, it's a fantastic point because it's just showing the maturity of these players, the industry. So you've got it like from that level, and I think it's It's that regular sort of crossover to the regulatory side. And then like just this past few months, we've had some really big exploits that are making people question like, hey, DeFi, like, am I getting paid enough to play in DeFi? And yield, unfortunately, at the same time we've had the big hacks, we've had yield compression and quite a like DeFi native pure on-chain yield. When the market is as it is now, it's a little sideways. We're in a crypto bear market winter at the moment. But when it's not as bullish as it has been, you don't have the funding rate and the other sorts of activities that generate yield in DeFi, and that's compressed. And so, but the risk doesn't change, right? Like an important point from my head of risk is always sometimes people are like, I can't afford to buy the cover. The yield is tight at the moment. But it's like, okay, but just bear in mind that the risk of the protocol, for instance, hasn't changed because of the yield environment. Bear in mind you might be yield naked, as it were. So because of these big exploits, the biggest of all was recently would have been the zero incident that it wasn't even, had not like Aave, nothing to do with the root source of the exploit, but the blast radius was kind of like massive. And given it impacted Aave, which is one of those blue chip, close to household names, certainly within crypto, but like even wider, the fact that it could potentially have taken down Aave in a meaningful way. You've seen all the you track on DeFi Llama, for instance, you'll have seen like aggregate amount of TVL or DeFi protocol has dropped substantially. You can see the withdrawals that took shortly after incident, even with DeFi United coming, like this industry collective coming to sort of do a bail-in equivalent. So those sorts of drivers have made everyone. We've had tons of inquiries come through on that because people are like more and more realizing you can't offer these forms, these protocols. Your users are becoming much more savvy. In the DeFi summer days, it's just like this is such a crazy experiment. You're dealing with these people that are like just really early adopters, and they're willing to take risks that many others won't. You go to the general public, people, it's like when you drive, you're not expected to understand all the minutiae of how the engine works. Same thing with banking, the equivalent. So that's where you got to have your warranties and your support helplines, and what happens if the car breaks down. You need the equivalent here, and I think that's the sort of stuff that we're trying to do at Nexus Mutual with these players.
That's amazing. Yeah, I mean, I've always been a huge fan of decentralized finance, and that's where I've been niched for the past 6+ years. What I enjoy thoroughly about DeFi, aside from the risk, is obviously that we as individuals have access to complex strategies that wouldn't be available to you normally, right? You get to have access to financial strategies that maybe only, a hedge fund, for example, could even contemplate, having access to. So I am a huge fan of DeFi. I would hate to see it suffer more. You're very right that we have experienced some huge exploits in the last, year since 2026. And it's great that you guys are actively putting measures in place to help that niched industry. And it sounds like even on the, with Aave releasing like this pool, it sounds like we are doing things as an industry to make retail feel safer to participate in these markets. But yeah, it absolutely is high risk, access to very advanced risky strategies that, potentially an individual that don't fully understand the risk and the nature of participating in a market like this, and with certain smart contracts, etc., that it is a dangerous territory. However, yeah,
No,
go.
please, I didn't mean to interrupt. Well, what I wanted to say is, I think there's a lot of really good news. Like, obviously, it's a scary time. I think because of AI, it's sharpened minds even further. We're getting things taking place that probably wouldn't have happened without being an AI assisted exploit. So
Mhm.
that is kind of scary. Although I think our view is that whilst we're going through of heightened period. And it only takes the attacker one vulnerability that the defender has to draw up everything. But there are really fantastic people working in this security broadly, but specifically crypto DeFi security, and
Mm.
building lots of great tools. And we love to partner with these guys. We think that it's a period, and the industry is adapting. So I think
Yeah.
there's good news there, right? And then it's really interesting what your interest and love of DeFi. Many of us share that. There's the really it's the degenerate. There's lots of really like crazy / innovative stuff there. There's risky things. There's also super safe stuff that you can do. And I think one of the things that sometimes people don't even know that Nexus. One of the things that hopefully being on this podcast and live recording with you guys and the audience, there may well be a few people that hadn't heard of Nexus Mutual before, didn't know that you could get cover for these sorts of exploits. That'd be fantastic to broaden the people's awareness.
Yeah.
And also just that a lot of the times, some of the people that knew of Nexus back in the early days, they still, they've heard how, up until some of these bigger, the 2026 exploits were kind of like shock people because everyone generally thought smart contracts had been battle tested, they were Lindy, and that, the risks were getting less. They brought our data confirms broadly it is getting less risky. It is just sometimes out incidents, and you've got to have a risk management. But there are plenty of things out there too where on a risk adjusted basis, and that's the important bit, it isn't the headline yield, it's the risk adjusted yield. And proxy, you could go and use a rating agency. S&P are stepping into the space now. There's crypto native ratings companies that are doing things on stable coins or DeFi protocols. Those could be things you can do your own research. You can look at the Nexus Mutual cost of coverage, and if that's greater than the yield that you're going to generate on whatever you're doing, question it at least, right? But there are we point out now there are plenty of things that we cover that are way cheaper than anyone ever thought it would be. So just as a little example, dealing with a really exciting new fund, an RAA out in the US, and they do a lot of Uniswap liquidity provisioning. And I told them they could buy cover from us for about 25 basis points of notional. I was really happy because they were like, wow, that's great. We didn't think it could be that cheap. Whereas often the refrain I can have from some others sometimes is just like expectations that things are too expensive. And that's one of the challenges that we've been working with as a team for years and years. But we always find ways to engineer, like work and structure with our friends and partners, and as well as retail, some products that give them coverage across like not just one protocol, but a whole series.
Yeah.
It might actually be worth me saying what the coverage is, right? Because we've got a good 2/3 of the way in to the recording here, without me mentioning specifically what exactly it is we cover. So maybe we should
Yeah, absolutely.
do
Please.
that. So like, because I mentioned the genesis around like the DAO hack, that was a smart contract exploit. So it's the kind of thing where as opposed to a traditional finance counterparty, when you're deploying capital into DeFi, it's the code primarily that you're relying on. So at its core, Nexus is kind of one of those early innovators against smart contract risk. Right? So it's to do a lot with the code, although we also deal with some economic-based risks, and I can unpack that in a second. What we aren't doing, for instance, is it's good to give account. Sometimes people will say, "Hey, can you insure my Bitcoin against price volatility?" And to that extent, that's a market price-based risk. And to that extent, it's like, well, that isn't what we could, but it's not really like not our strength. Like, go to a market maker on the price of Bitcoin, and that'll protect you if there's a lot of volatility in the market price. Those products already exist. We've been carving out and innovating new ones that have been there before. So we have this thing called protocol cover, and whilst it at its base is the smart contract, sometimes people think that's all it is. It's quite a significantly more than that. Matters now because of the changing nature of the threat landscape and the types of exploits that are taking place. But then layered on top of the smart contract risk, we have something called against Oracle risk and Oracle manipulation. So now, in DeFi, it really matters where you're getting your pricing info and other like sources of info from the real world. And that's broadly what oracles do. And so we provide this coverage here. And it's happened on numerous occasions now that it's not necessarily the smart contract code itself, it's the oracles. As we move into a world where RWAs become real world assets, become more and more of like the yield generation of DeFi, it really matters. We just had a recent issue on Hyperliquid. I'll plug the Nexus Mutual blog. Go to the Nexus Mutual blog. Maybe we can provide a link after the like some notes to the show here. And we recently published about like the exploit that happened on Hyperliquid and how that was essentially an Oracle failure, and how if we had listed it and provided the cover, we didn't at the time, but essentially like the terms that we provide would mean that we would provide coverage where we don't think necessarily would. And then on top of the Oracle manipulation, it can be governance attacks. Those don't necessarily get as much in the news, but I was in ECC earlier this year, and I met a guy working specifically on protecting teams from those sorts of governance issues.
Yeah, quite an extreme governance hack just happened with Bonk, right? With the Treasury.
Yeah. And then so it still happens. Like it kind of can go away for a couple of years, and then boom, it's like massive event can occur. And then alongside that, this is where we stray into like economic less than the pure code. It's what we call bad debt severe liquidation, which is to do with like the way that a lending borrowing protocol will liquidate people when it as the market is impaired. So that's exactly what happened with Aave. Whilst it had nothing to do directly with the layer 0 DVN and the impact it had to Keltdow with their ETH, because RSETH was an accepted asset in Aave and the way that things are pooled was having a knock-on impact on Aave markets. We saw this with more. They're not the only ones. We saw some stuff late last year with Morpho and other platforms, and so you get this bad debt impairment, and so we cover for that risk too. And then when you factor all those, I'm doing a plug here, but when you factor all those things in at the price that we can do it at, then I think when the sophisticated investors they go, wow, okay, that's really pretty cool, because it takes away all this crypto idiosyncratic risk that they do need to have a handle on as a risk manager, but they might not be able to. Otherwise, without us, they wouldn't have a way to offload it, and it allows them then to focus in more finely on the risks that they do want to take, because you always have to take risk. The idea that you earn yield without taking any risk, it's not possible, like breaking the physics of finance.
Yeah.
But it's the risks that you do want to take versus those that you're not comfortable with. So hopefully that's a good exposition there for the audience.
Yeah, it's incredible. And obviously in DeFi, there's, I like to call it, there's a little bit of a house of cards in which a lot of protocols almost borrow each other's yield and communicate with each other's smart contracts to ensure that there's either a high yield or a more neutral yield, and you can get the more kind of house of cards that you place, the more interesting risks you can take.
Yeah.
So, just interestingly, like, how do you guys deal with that? From like, let's take an example, like Morpho or Aave that are using like different protocols, yield generating under them.
Mm.
How do you manage that in the risk profile, just
Yeah.
high level?
Sure.
Because I think that's super
Yeah, well, at
interesting.
some point we'll get out of my pay grade, and we need to sub me in with my head of risk to get really into the underbelly of it.
Yeah.
But I can provide the overview. And look, again, like, you're flagging something really really important to the audience, which is, it's kind of like a superpower of DeFi, that you have like modularity, that all these protocols can interact with one another. The way that vaults from Morpho through to the Vault infrastructure platforms, whether that's Vader, Lagoon, and others, you get this modularity, composability, amazing.
Hmm.
Like the stuff you can come up with, the core primitives in DeFi, and then build on them, amazing. But it does mean that risk can cascade, and that there can be contagion. So when my risk team, the cool thing, the challenge here is, versus traditional insurance that has hundreds of years of data, this is an industry still, the DAO hack keep going back to, it's only 10 years old. How do you
Yeah.
do this? So we've built lots of proprietary, we take as much data as we can. We've built a lot of proprietary tooling, have some very sharp minds in the team, and we model everything down to, unpack the risk stack here on that modular nature, and get down to everything. So like, if you go to the Nexus Mutual front end, you can even see live prices from us, that are being supplied from our decentralized underwriters. And you can look up the Morpho price on our Morpho blue chip list, which covers the
Mm.
majority of all the vaults and markets on there. It's kind of like an aggregate risk price, because it's covering, like, the annex is several pages worth of different markets listed on Morpho, because Morpho is open and permissionless too, and they allow people to curate all these different products. So we give you this aggregate price, but actually, oftentimes when we're dealing with people, they're only deploying into a handful of those. And if it's like a fund, their portfolio, they have a specific strategy, could just be a couple of particular markets. We can be precise on those markets and the risk of one versus another. So we look at everything to do with the configuration of the vault or the market and its oracle. Everything down to that degree gives us the confidence to price these things,
Mm.
with that specificity.
So there's almost like blue chip vaults and strategies emerging that are able to be much more predictable, and that's going to basically put us in a position where we can judge and move forward as a market. Because what I'd love to hear from you, from someone that's working so actively on the ground here, is where you see the DeFi space going. Because we are so early, and I think people forget that. I say this very often, where it's like it takes a very long time for new financial infrastructure and ecosystems to take off, like, hundreds of years. So the fact that we've only been dealing with decentralized finance for 10 years at minimum, at maximum, sorry. um, what can we expect in the much larger future range? Not even necessarily just in the next few years, but can you see smart contracts being integrated into some of the biggest financial institutions? They already are, but like, how do you see it from even like a retail perspective and also institutional perspective of how they're going to be adopted?
Yeah, fantastic set of related questions there. I mean, it's one of the, like, high level versus the sort of bearishness generally perceived around crypto prices. Anyone involved in institutional projects, institutional adoption is pretty balled up. The Wall Street crowd coming on. At the same time, like, I like to, I'm taking a sort of center, center stage participation in that with what we're doing. At the same time, like the reason we came in, myself and my colleagues came into this space was around the open permissionless nature of DeFi. So we're allowing anyone still that's self-sovereign or wants to be able to participate here, but also building out a range of products, just make it so much easier for the general public that don't want to deal with all the complexity. So can you repeat part of the question, because I think I've just slightly lost track of the next bit.
So we were basically discussing that decentralized finance is very new. Obviously, smart contracts are a completely new innovation. There's some real innovation in blockchain and crypto and decentralized finance, right? And that's blockchain technology itself and smart contracts. And through smart contracts opens up a whole new world of financial markets that can be participated in. But they're very new. They are high risk.
Yeah.
However, they are getting adopted, at a high rate with tokenized funds being a thing now and RWAs. And I think we had this dream of it happening a lot quicker, especially at people that are very deeply in the industry. But I don't think that's super realistic. I think there's going to be a larger span of time before, an average individual could potentially communicate with a smart contract and feel very safe doing so.
Yeah.
But I'd love to get your perspective on like the future of this technology and where you see it going, the space as a whole.
You're so right. It's still such early days, but so it's therefore really promising, everything that's taking place, and it's going through all these multiple market cycles, phases of consolidation. We're hoping and planning at Nexus Mutual to be there for the very long term. So very excited, by like the sort of deal that we did with EtherFi, and there's a bunch more in the pipeline on that basis. Summer is always a good time to have a little rest with, take a moment to reflect, time with friends and family. Surprisingly busy for us right now. We're getting a lot, again, like from the sort of dual forces of what sort of occurred and people wanting to lend on our knowledge and experience, combined with people wanting to build best-in-class products and integrate coverage, insurance for their users. We're kind of seeing that all firsthand. There's a lot of in the sort of short to medium now. There's the people that were building in the what we categorize as the RWA space. That's really taking off now. The size of capital being deployed. It's a tricky term because it means so many different things. It means everything. I mean, a stable coin is an RWA because it's based off dollar deposits. You've got tokenized T-bills and other products like that. And then you're going more and more out on the risk curve. You're getting things like private credit through to tokenizing all kinds of commodities and other assets. It's a really exciting time. It's also quite a dangerous time because, like my head of risk mentioned at a conference summit last year, he's sort of like, what do you predict as the risks for 2026? And we're like, we think it's going to be in the RWA space because there's so many people building, there's so much excitement, and there'll be some really high quality stuff, and there'll also be things that like maybe not intentionally just aren't built out fully. Full capability. So sort of call to arms for our friends and network, the builders, is we love it when people come to us early to engage with us, even if they're not ready to have coverage put in place. We will do diligencing with you. We will help shore up your defenses and spot some gaps you might have missed, no matter how sort of A-star your team is. From the perspective of an underwriter, we always have a unique vantage point. But we're very keen to participate with people here. We're building out some customized products. I mentioned before our protocol cover. We have something called DPEG cover for when DPEG events occur. People doing looping. We have another product. We're also sort of tailoring stuff, probably not complete departure, but like making sure that our package works really well with the RWA space. So yeah, I mean, I'm bullish here that DeFi is this great playground, but also is for the for the professionals, for the grown-ups, can help be maybe not the front, the superstar at the front end. It's kind of the DeFi mullet. It's at the back. It's doing all the hard work, heavy lifting for the institutions that want to use it as a platform. I mean, just seeing
Yeah,
like the way that Morpho keep on announcing a new strategic partner,
I know.
is right,
It's so,
and everyone else is stepping up their game too. So, and we're trying to participate alongside that. So, I think there's a lot of really great stuff taking place. But at the same time, as I have to say from my with my insurance hat on, beware of the risks, and I'm sure come reach out to us.
yeah, lovely. Okay, so let's finish up with I would love to get a little bit personal just before we go, because you've had a very successful career in primarily institutional sales in the DeFi space. So, do you have any tips to anyone that's looking to build themselves up to your level or are working on deals of this gravitas? Just maybe a few words to help them improve their processes and actually have the skills to land deals of this level.
I mean, we sort of, it's really interesting because we kind of touched on it earlier in our conversation, to do with the EtherFi deal. Like relationships really matter. Really engage with someone, understand the problems that they're trying to solve. You know, unfortunately, crypto and DeFi has all too often been based on like short wins, incentives that dry up. The worst case, rug pulls and all that bad stuff. So, I think what's fantastic here is you get to both be in this space, DeFi, institutional DeFi. It's around dealing with all this innovation, all this like heady, exciting stuff and new things taking place. It's, I guess like taking from my TradFi, like learning from some of the best hedge fund managers in the space, being in the room with all these smart people, engaging with them and building relationships for the longer term is, I think, is really going to pay off in this space, because it just sort of brings you above versus the sort of people chasing that.
Really good advice. Thank you. So I like to end the podcast, and thank you so much for coming. It's been
Pleasure.
fascinating. I've learned a lot. But I just like to end with one question, because everyone that comes on here have a level of success that I think we can all inspire towards. And from my personal view, a lot of that is to do with your mindset of how you navigate this world. So I love to ask each of the guests, what mindset did you have to leave behind to get to this position, and which one did you have to adopt?
Oh, interesting. The thing that sort of springs to mind for me, and I think this is because you said it's personal, so it's unique for everybody. Mine is like an imposter syndrome mindset. And I guess like I don't think I'm ever fully removed from it. I guess it's a bit like, with I mentioned adventurous sports, like having a little bit of fear is a good thing, like the right kind of fear. Always being on your toes is, like the imposter syndrome, I think, does that for me. But just being aware that like there's nothing better than diving in questions and fresh perspectives, and people really value that. When I joined Nexus Mutual, the guys were like, "We really want you to grok the protocol, everything in a short space of time." And there's loads, and we've been around for a long time. But don't be afraid. And this is like coming from a friend as well as the CEO founder, who's just a. And so I was like, oh, I'm out of my depth here with this like fantastic team that have been together for such a substantial period of time. Like, question yourself, like, how can I add some value? But then I just remind myself of things that I have achieved and how I can bring fresh perspectives. And that's what we started doing. And it just started to take off from there. So the imposter syndrome bit is a lifelong thing for me. And just learning how to use it in a positive sense, I think is a really, if anyone else has that similar thing there, that I think you can actually get it to be a really strong motivator, and it means that you're like in researching things and work, taking extra steps just to improve all the time.
Yeah, I couldn't agree more. Thank you so much, Ralph. It's been a pleasure. I really appreciate you coming on, and just amazing work at Nexus Mutual. It's firms like yourself that are going to actually create an industry that we can move forward in and be in a professional environment. So, really, God's work, and I'm so excited to keep it up to date with what you guys are doing. And it's been a very special hour with you. Thank you so much, Ralph.
Thank you so much for giving us this platform and for me to come on board. It's been in the industry together for a long time. It's been a fantastic conversation this past hour. Keep building.
Have a lovely day.
You too.